Hey, what's going on, everyone? My name is D. Anthony with Evolution Traders. In this video, I kind of want to go over my chart. I've put some, pretty little boxes and some colors and some dotted lines on the screen just to kind of analyze the market. Today is a day where a lot of traders can get chopped up because the market didn't really push higher. It didn't really push lower. A lot of traders come into the market each and every single day expecting big moves. Although their ranges were big today, there wasn't a whole lot of follow through, right? We were very range bound. We come up to the top of the range and then it sells off, and we go down to the bottom of the range and then it pushes back up. So a lot of breakout traders or breakdown traders were probably getting stopped out today, right? A lot of fake outs. If you're a range trader, which again can be a little bit more for the experienced trader because you don't really have a good level to put, right? So if you're a range trader, what that basically means is you're selling at supply, you're covering into demand, you're buying at demand, and you're covering into supply. It sounds easy, but when the market is opening up, sometimes you get those wicks that kind of go below your stop loss, and then it kind of comes back up again, and then it kind of plays with your emotions for a little bit and then goes in your favor finally, but you're already out of the trade. So what we're looking at on my screen is the first hour range. Okay, so what I like to look at, the market's going to open up at the half hour mark. What I like to look at is that first hour candle of the day. Okay, so for me here in California, the market opens at 6:30. Okay, depending on where you live at, the New York session opens at 9:30. Okay, so 9:30. So correlate that to whatever time zone that you're trading in. But for me personally, at 6:30 in the morning, the market is going to open. So what I'm looking at is that 6 a.m. through 7 a.m. zone. Okay, that range. What I want to see happen in that time frame is a range to get put in, and then I'm looking for a confirmation of that range on a following hour candle or 5 minute time frame, 15-minute time frame, whatever time frame that you're trading. So the way that it would work would be as such. If the range was around 17,916 to the high side and 17,821 to the downside, we're looking at around a 100-point range, right? We can see a 100-point range here. What you're looking to see have happen is this. You are looking for the range to be broken, okay? You're looking for the range to be broken, which it's broken here, okay? Notice how this breaks the range. What you are then waiting for is a following candle to confirm that break of the range, okay? Does that make sense? So if we have our range, we're looking for a break of the range, and then we're looking for a confirmation of a following candle to confirm the new high price. Then we would be going long. In this particular situation, not only did we break the range, but we failed to confirm the new high price. So there is no long. So what tends to happen is a lot of traders will jump this entry here because we're breaking out, and then it pulls back. Okay, and that's where you find yourself in a lot of trouble. Now, another strategy, another setup that I'm always looking for is the 20 SMA play, right? So if you notice here, okay, if you notice here, we get a close over the 20 SMA. Okay, what you are then looking for is a following candle to confirm that range. Now, if we're looking for a following candle to confirm that range, you would be getting in on this following candle here. And maybe I should make these arrows a little bit smaller because I feel like they're a little bit too big. And let me take this off. Here's the candle that closes over the 20 SMA. And here is your confirmation candle that confirms the close over the 20 SMA. Now notice this is also a candle that gets rejected on the following 5-minute candle into the supply zone, which we now know is a supply zone, before failing that breakout. However, if you're a scalper, there's plenty of room to make money in this trade, because if you look at the high price, that you were looking to get in at, it was 17,910. Your entry would have come 15 minutes later, around 15 minutes, and that entry price gets confirmed and goes up to a high price of 17,914. So from 17,000, okay, 17,910 to 17,914 is the entry candle, and then goes up again to 17,931 from an original entry of 17,910. Now this happens very, very quickly, right? One thing that I want you guys to keep in mind is this happens extremely quickly. So this pop, this 20-point move, I know happens very quickly because I was in this trade this morning. As soon as we confirmed on the prior candle, I took my entry, I sat through a little bit of drawdown, and then it popped. And as soon as I got green, I got out. Now, why would I get out versus holding and expecting this to kind of, continue to run all day? That's going to come down to you as a trader. But the reason I chose to get out, and again, it wasn't a very big win. I'm not going to sit here and say I won thousands and thousands of dollars. I made around 233 bucks. However, I played 2 mini contracts, okay? 2 mini contracts. So if you've ever played mini contracts, you know how fast that they can move. So all I'm realistically looking for is to get in on my pattern, on my setup, get green, and get out. From there, I can have a clear head and ask myself the question, do I want to continue to trade? Or do I want to stop trading today because I'm green? Or do, maybe I want to take one more trade and use risk that is not going to allow me to lose that profit of $230 or $235 or $33, whatever it was on that first initial trade. So instead of playing 2 mini contracts, maybe on my next setup, right? Your next setup would be here, a close below the 20, and your confirmation would be on the following candle that does confirm the low price. Maybe I tell myself, instead of playing 2 mini contracts, maybe I play 5 micros. Okay. Now, if we look at this particular setup, the low price was 17,858. Not only does it confirm on the following candle, but it goes down within a matter of 10 minutes to a price of 17,834 from a price of 17,858. You're looking at another 20-point move. Now, again, if you're trading 5 micro contracts, for every 1 micro contract on a 20-point winner, you're looking at around 40 bucks. Okay. So it's not that much, but when you're trading 4 or 5 micro contracts, it can turn into be a pretty good chunk of change, over $100, $150, depending on where you're getting filled and where you're getting out and where you're clicking buy and sell and slippage and all this other stuff. Right. So again, if you just took these 2 trades, although they don't look like much, right? And I should change my color here. Although they don't look like much, what color would stand out? Yellow maybe. Although they don't look like much, right? Go back to my arrow tool. Although this trade doesn't look like much, and although this trade here doesn't look like much, if you're sized appropriately and you have the mentality of, I've identified a pattern that I recognize, a trade setup that I take often, a trade setup that I've back tested thousands of times, and I'm going in with the intention of, I want to get in, get profitable, and close it out, and then analyze if I want to still continue to trade afterwards with a clear mind, you will start to notice that your win rate is going to increase. Okay. Now, there's a lot of traders out there who, are looking for 1-to-1. They're looking for 2Rs or 3Rs or so forth. They want to risk 10 points and they want to make 40 points. I get it. It all sounds good. But when the market is doing this, what it did today, where it's kind of chopping, it's a little bit in distribution, it's a little bit consolidating, and that's not even a word, but when it's in consolidation, right? When the market's doing that, you have no idea if there's going to be follow through or not, right? Your guess is as good as the next guy's guess, right? You know more than I do in this particular situation. Do I know, for example, on this particular trade, that I want to get 45 points? Is it going to go 45 points? Maybe, maybe not, right? What's another way that you can actually use a take profit, right? If you look at the time that you want to get into the trade, like this, for example, 20 SMA play, if you look at the range of the candle, it's 48 points. If you kind of scroll down to the ATR, right? Scroll down to the 5-minute ATR, which is average true range, you'll notice that it's around 25 points. So you're going to start to come up with these price targets, these take profits where you can get into these trades Use a 5-minute ATR. Hey, it's 25 points. If I get, 20, 22, 23 points, I'm going to take my profits, right? You don't always have to get the full range. Now, again, I know there's going to be some very, very wise guy out there that's going to say, well, if your stop loss is going to be here, right? If your stop loss, excuse me, if your stop loss is going to be below your reason why, and your entry is up here, and you're going to risk whatever this is 48 points. Why would someone take 20 points? Why would someone take 10 points? Because if I take a losing trade, I'm not only going to give away my profits, but I'm going to be in the deep negative. I get it, but you have to understand, every single trade is not going to give us the same amount of risk, right? Every single trade is not going to give us the same amount of risk. We do not control risk by the amount of points or ticks that we are risking. We control risk by the size that we are trading. So for example, I'm not going to take 10 mini contracts and give up 40 points, okay? It's just not going to happen. There's just way too much risk. But if I take one micro contract and I risk 50 points, I'm only going to lose $100, right? So how much do you want to risk? What can you afford to risk based on your account type and your account size? Once you figure that out, then you can adjust your position sizing. And if the risk falls outside your parameters where it's even too much for 1 or 2 micro contracts, guess what happens? You don't take the trade. I hope you gained a little bit of insight on this video. Again, I started to create these supply and demand zone areas here because once I started to see price action develop, I was noticing every time we're coming down into this range, we're bouncing. We're coming down into this range, we're bouncing. We're sweeping this range, we're bouncing. So right now the buyers are sitting above 17,821 all the way up to around 17,866. There's a 40-point range here where buyers are stepping into the tape, okay? And if you notice up here, you will notice sellers, right, are in the tape up here. Every time we were getting into this range above that opening hour candles highs, we were selling off. We're getting into this range, we're selling off. Now, we put in this nice pop once Jerome Powell started to speak here, but then we sold off, right? So again, keep that in mind. What you're looking at now, though, on the chart is you're looking at, right? I want to show you guys something here. I'm going to take this off. What I want to show you is that right now, once we put in this high here, we did pull back, and now we have bounced and now have back tested. Okay, does that make sense? So we've put in a high from the low to the high, we've pulled back, bounced, and now we are back testing previous resistance. Makes sense? So the next move out of this could be an up move. Does that make sense, right? Notice the chart pattern here. Up, down, up, pull back, no takeout of the lows. Could we be looking to push higher here? Hope this video helps someone out there. I'll see all of you guys on the next one. Again, remember to like, comment, subscribe, and I'll catch you guys all later.